For much of 2011, Colorado Springs was hanging with nearby Denver as a top-performing apartment market, but in 2012, it's been a very different story. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Colorado Springs update. 1 year ago, in the third quarter of 2011, Colorado was home to two of the nation's top-performing apartment markets. Now, lots of attention was being showered on Denver, and for good reason, but the smaller market of Colorado Springs, just to the south of Denver, was performing just about as well at the time. Let's look at some numbers here. Take a look at Q3 2011 data. Occupancy at 95.8% at the time in Colorado Springs versus 95.3% in Denver. Annual rent growth of 5.4% in Colorado Springs versus 5.7% in Denver. And what's happened since then? Well, Denver has remained a top-performing market. It's gotten even hotter, actually. Occupancy at 96.3%, up 100 basis points year over year. Annual rent growth at 6%. But at the same time, the apartment market in Colorado Springs has cooled off. Let's start with the occupancy side. Occupancy down 90 basis points year over year, and it was a widespread decline with all 5 submarkets recording occupancy loss. And that year-over-year number traces especially to a huge drop-off, specifically in fourth quarter of last year. As of Q3, occupancy comes in at 94.9%, still solid, and it was up 50 basis points in the quarter, just not enough to make up for that earlier backtracking. Now, the more significant and more concerning cool-off has come on the pricing side of the ledger. Annual rent growth levels have fallen from 5.4% 1 year ago to just 1.5% as of Q3 2012, and the slowdown has been generally widespread, with one very notable exception. Northwest Colorado Springs, which is the metro's most expensive submarket, has actually seen rent growth levels accelerate. Rents there are up a notable 6.4% year over year. No other submarket is above 2.2%. So what's happened to cause this slowdown in the Colorado Springs apartment market? Well, in this case, the story is actually quite simple. The metro reverted back to job loss. You can see Colorado Springs had been showing solid year-over-year employment growth until third quarter 2012, when the metro recorded a loss of 4,400 jobs, downsizing the employment base 1.8%. That was actually the deepest loss among the nation's 100 largest markets as of third quarter. Now, it could turn out that number may be overstated a bit, but there's no doubt the economy has cooled off. The losses do not trace to any one segment of the economy, but rather have been widespread in nearly all employment categories. That said, at this point, we don't expect Colorado Springs to sustain job losses through the next year. We're expecting to see a little bit of bounce in the job growth numbers, recovering some of those jobs lost over this past year. And so that should allow for some growth in the local apartment market, but certainly not to the degree that we saw in 2011. And that wraps it up for Colorado Springs. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.